Good morning, team. Thank you so much for jumping on today's Monday Morning Pep Talk, episode number 280. Market stats every real estate advisor should track monthly. And on this 280th episode of my Monday Morning Pep Talk, I will discuss and define the market stats every real estate advisor should be tracking monthly, if not weekly. These numbers are your business's vital signs, metrics that tell you where the market is heading, where the opportunities lie, and where your focus needs to be. If you want to operate like a true professional, not just react to the market, but anticipate it, then you need to become fluent in the data that drives decisions. This episode is about sharpening your edge and building the discipline to stay ahead of the curve. But before I jump on to the call today, the specifics, I want to remind you of my professional purpose, and that is to help you, the full service, full fee advisor, optimize your productivity and help you become the best version of yourself. Why? Because I believe happy advisors sell more real estate. And I do that by teaching you how to handle the challenges and opportunities you face every single day. And I know you can effectively manage the situations that arise on a daily basis in your business, then you will be more productive and live a life that reflects the best version of you. And my ask today is that you listen as if you are right here in my office in a one on one coaching session, or maybe we're on a phone call. On today's episode, we're going to break down the most important market stats that every real estate advisor should be tracking. And more importantly, why it's your responsibility to know them inside and out. In a shifting market, your value isn't just in opening doors or writing contracts, it's in your ability to interpret what's happening locally and advise with confidence. Your clients are relying on you to be the expert in your hyperlocal market. And that expertise doesn't come from hope or headlines, it comes from doing the work. The advisors who take the time to study their data, spot the trends, and understand the patterns are the ones who win trust and win business. This is about building credibility, predictability, and long term success, one stat at a time. Now, I just want to make a note that many of your MLSs have reports that can easily be run to go through these stats. Okay. But what I want to do today is I want to just make sure that you know the calculations and how they're calculated so you can, if needed, do them yourself. And the first one I want to talk about today is months of supply. Months of supply is a core real estate metric that measures the balance between supply and demand in any given market. It tells you how many months it would take to sell all the current inventory at the current sales pace, assuming that no new listings come to the market. And here's how you track it. To calculate months of supply, use the following formula. Active listings divided by the number of homes sold per month equals your months of supply. Now, for example, if there are 600 active listings in a market and 100 homes are selling per month, then that's 600 divided by 100, which equals 6 months of supply. You can track this by pulling monthly data from your MLS, CRM, or market analytics tools. You'll want to do this at multiple levels: citywide, neighborhood specific, and even property type specific, i.e., condos versus single family, for example. Why does this matter? Well, number one, it's going to give you the market temperature. 1 to 3 months is a seller's market. 4 to 6 months, balanced market. 7+ months, you are in a buyer's market. It gives you a pricing strategy. Knowing the months of supply helps you set realistic pricing expectation for sellers and strategic offer tactics for buyers. It gives you you can use it as a forecasting tool. Months of supply trends can indicate future market movement. A decreasing supply means rising competition and possibly rising a decreasing supply means rising competition and possibly rising prices. An increasing supply often signals softening demand. Advisor credibility. If you walk into a listing or a buyer consultation armed with this stat, you're not guessing, you're guiding. And that, my friends, is how trust is built. Okay, I want to move on to days on market. Days on market tracks the number of days a property is listed before it goes under contract. It's a direct indicator of buyer demand and pricing accuracy. How do you track it? Well, most MLS systems automatically track days on market for individual listings and market areas. There are typically two versions. Days on market, DOM, which is the time on the current listing, and then CDOM, which is cumulative days on the market. These are total days across multiple listing periods, even if the property was taken off and relisted. Now, you want to track average and medium days on market across your market monthly. Pay attention to property type and price point. DOM can vary significantly based on these factors. Why does this matter? Well, pricing insight. A rising days on market signals listings are sitting, often due to overpricing or softening demand. Market pulse. Low days on market means buyers are active and inventory is moving quickly, a sign of a competitive market. Client guidance. For sellers, it sets realistic expectations on how long it might take to sell. For buyers, it shows how quickly they need to move. And then we have negotiation leverage. A listing with high DOM may be more negotiable. A low DOM listing may require stronger offers. Days on market tells you how fast the market is moving. And combined with months of supply, it gives you a dynamic picture of both inventory and demand. Now we're going to move on to list to sell price ratio, LSP ratio. The list to sales price ratio shows the relationship between a property's final sales price and its original or last listed price. It's a strong indicator of market competitiveness and pricing precision. Now, how do you track it? You take the final sales price divided by list price, and that gives you the LSP ratio, the list to sales price ratio. Very simple. Final sales price divided by list price gives you the LSP ratio. A result over 100% means homes are selling above list price. Exactly right on the listing price, exactly 100% means homes are selling at list price. Means you're really precise. And then under 100% means homes are selling below list price. You can find this stat through your MLS market reports or by exporting a sample of closed sales and running the calculation manually using Excel. Track it monthly for your primary markets, broken down by property type, price range, and your geographic neighborhood. Okay. Now, why does this matter? You use it for buyer and seller strategy. For sellers, it helps set a pricing strategy that aligns with the current market behavior. For buyers, it signals whether they need to come in at or above asking or below asking to be competitive. Now, it also shows market momentum. If the LSP ratio is rising, demand is heating up, often a sign of multiple offers. If it's falling, it may indicate a cooling demand or pricing misalignment, maybe where sellers haven't quite caught up with a softening market. Okay. So we also want to look at this as, you giving professional guidance. Sharing this stat in client consultations enhances your credibility. You're not guessing, you're translating real data into smart decisions. Okay, so tracking months of supply, days on market, and this list to sales price ratio gives you a three-part dashboard of real-time market health: supply, speed, and pricing pressure. Now, you can use AI to create market stats for your presentations. Track the same three metrics consistently. Okay. This is building lists, building reports over time for your very hyper local market that you sell in. Track the same three metrics, these three areas: months of supply, DOM, and LSP ratio, um, consistently. And don't overwhelm your audience. Just consistency builds clarity. Have these stats at your fingertips at all times. Use a 12-month view. We've talked about this 12-month rolling view. It always, you want to always show the last 12 months so trends are obvious. This smooths out the seasonality and makes the story easier to follow. And then one chart per metric. Keep each stat on its own clean, easy to read line graph. Simplicity equals impact. Use the same format every time, same colors, fonts, and layouts, so your clients or your team know what to expect. Familiarity builds trust. Avoid clutter. No need for fancy visuals, dual axes, or extra data points. Just the key trend lines. Let the numbers tell the story. Include a one sentence takeaway under each chart. Inventory is rising equals more options for buyers, or DOM dropped again, which means increased urgency in the market. Update monthly, review quarterly. Monthly helps you stay sharp, quarterly helps you see the bigger picture. Now save this and reuse. Build a simple template once, then update it each month. Make this a habit, not a project. Use visuals to create conversations. Don't just email the charts. Bring them to meetings, bring them to your consultations, and use them in your listing presentations, your buyer consultations, and reference them during any type of client consults. Tracking just a few key stats: months of supply, days on market, and list to sell price ratio can instantly elevate your market knowledge and client conversations. You don't need to be a data analyst. You just need to consistently track the data for your hyper local market. When you understand what the numbers are telling you, you stop reacting and start leading the conversations. Make this a monthly habit, and over time you'll build a sharper instinct for where the market is heading, excuse me. Stay disciplined, stay informed, and your clients will follow your confidence. Now, if today's message resonated with you, do me a favor. Share it with someone in your world who needs to hear it, whether it's a colleague, friend, or someone on your team. We do rise by lifting others up. This is why I do the Monday Morning Pep Talk. And don't forget, every episode is also sent out via email. So if you're not already subscribed, make sure you're on the list by subscribing on my Instagram profile at Ask Jim Miller. I'm simply here to help. And if this helped you, chances are it could help somebody else too. Team, thank you so much for a great day and listening here today. And I appreciate it. And I'll be back soon with more content. Thank you very much.